Hello, this is Alexander Green, Chief Investment Strategist with the Oxford Club. I hope you had a good 2020. I know that's almost impossible for some people because we had a health crisis and an economic lockdown and a severe bear market and then a huge rebound in both the economy and the financial markets. So some people had a very good 2020, others didn't. But actually, most Americans have never been wealthier thanks to rising home prices and record high stock prices. And if there's one stock that everybody's been talking about lately, it's Tesla. And I had a column that came out this week and talked about why I'm bearish on Tesla. This seems like apostasy to some people because Tesla is one of the great growth stocks that has led this market higher. And I'll be the first to concede that CEO and founder Elon Musk is a really smart guy, that Tesla is a fine company, and that it makes wonderful products. So why am I bearish on the stock? The short answer is the valuation makes no sense whatsoever. You have to remember that you're not just buying a stock, you're buying a business, and that business carries a valuation. And that valuation may be very inexpensive relative to sales and earnings, or it could be wildly expensive relative to sales and earnings. And we know from the dot-com bubble and crash that took place more than 20 years ago now, that stocks that trade at crazy valuations can take a long time to recover. And in fact, Amazon was one of those stocks. Amazon crashed and burned in the dot-com bubble, but it was a real company with real sales and real market share, and it came back and did very, very well for shareholders. Other companies like Pets.com, for example, never came back, and people lost their entire investments. I do think that Tesla belongs in the Amazon category. It's a fine company, but it's trading at hundreds of times, not just existing earnings, but prospective earnings. And so really, what has happened in Tesla over the last year or even the last few weeks to drive the stock so high? Nothing really. And you have to remember that Tesla doesn't have a monopoly on EVs, electric vehicles. So there are going to be other car makers, including some of the world's best and most luxurious automakers, who are going to come out with their own electric vehicles and their own autonomous cars. And so I just think that the market's putting way too big a premium on the greatness of Elon Musk and the company. And Jeff Bezos was surpassed. He's no longer the wealthiest man. But if I was a betting man as to who will be richer a year from now, I would say that Jeff Bezos would be back well in the lead, because history shows that stocks that have a parabolic run-up like Tesla has also suffer waterfall drops. And I read all the time in the Wall Street Journal about people who have most of their portfolio in Tesla. That's just nutty. So it's a crazy, risky game that I think people are playing with Tesla right now. And as I said, I've seen bubbles before, bubbles in housing, bubbles in technology stocks. And I would think really what people should be thinking about right now is the reopening stocks, the very cheap companies, not the crazy growth stocks that trade at nosebleed valuations, but the companies that are very inexpensive relative to sales, earnings, book value, and dividend yields. So that's all for today. I want to remind you that you can read my commentary at Liberty Through Wealth, our free e-letter. I encourage you to sign up, or you can subscribe to this channel, and I'll be talking about stocks, bonds, interest rates, currencies, commodities, whatever's happening in the market. And we do share actual investment recommendations here, so you have actionable information that you can also take advantage of. So anyway, that's it for now. Thank you so much for joining me, and I look forward to speaking to you again soon.